we're still kind of getting started. So with that being said, healthcare is a fundamental need. All right. They remain consistent even during recessions. People still get sick. People still go to the doctor. People still have insurance, and the insurance is paying. Medical office tenants, they offer typically more stability than other commercial tenants. What does that mean? Well, we're going to talk about that. It's really important. We talk to a lot of investors, and we have a mix of investments in our portfolio under contract that we share with the members of our private family office. And different members have different likes and dislikes, and we certainly don't try to talk them out of it. We try to educate them in certain ways. So there are investors that well, I want multiple tenants instead of just one tenant, because logically, if something happens to one tenant, then the other ones are still there. And, at a first glance, it's true, but it really depends on the asset and also the price of the price of the building, which has a lot to do often with the quality of retail in many cases. So what does that mean? Well, let's say you've got something to think about. Oh, that kind of went off. Something to think about is if you've got 5 tenants in a retail, and it's a sub shop, it's a hairdresser, it's a T-Mobile franchise, and maybe if you're lucky, you have a dollar anchor store there. All right, you got things going on. What's really important is the financial soundness of the tenant. You don't want a tenant that's a T-Mobile that's got $50,000 in the bank, and the wind blows, and they're gone. They're gone. Your hairdresser, that same things there could happen. Sometimes there's not a lot of, depending on the location and whatnot, maybe not a lot of capital there. Sub shop, same thing. But they've got that dollar store. Well, you've got to be smart about that. We have some very sophisticated software, for instance, in this case, where we will take every dollar store across the country. We will measure the foot traffic of this particular dollar store by comparison and say, what are the odds that they shut this down when that lease is over, for instance, or even before. So how strong your tenants are very important. We very often will pick one very solid tenant with fantastic financials and maybe even a corporate guarantee with great financials, okay, over the 5. Makes sense, right? So in regards to the medical, doctors and dentists, they typically stay a long time. And we're going to talk about why they stay a long time. They typically stay a long time, and they're not turning over, meaning no turnover. You're getting the rent paid, and that's what you want, right? But there's other factors in there about how you're going to grow revenue with the doctor. There's different type of leases where it could be very costly to you if you're not careful. So we're going to talk about that. So medical, long-term leases, due to the high cost of setting up their practices and specialized equipment, plumbing, electricity. We know some medical offices, they have to take off certain parts of the roof to get the machinery in there, right? And so they just don't up and move because of the high cost of setting up. All right, so they typically stay in a location long-term and sign long-term leases. In the medical industry, we talked about it can be recession resistant. Well, there's a growing demand in the medical industry. There's an aging population. The United States has a huge aging population that keeps on coming and keeps on coming. And as that aging population, as that population ages, their medical costs just go through the roof. So that's part of what we like about that. We talked about high barriers to relocation, specific build outs. Doctors and dentists need very specific build outs inside of their offices. So that deters them from moving. As everybody knows, insurance is a big factor in the payments, where the money is coming from. Medicare, private insurance, whatnot, right? Those have a reliability because the doctors are collecting. Well, how do they collect? If you're a doctor or a dentist, you have the high cost of build out. All right, you plant yourself there, then you're growing your clientele, right? You're growing, you're getting word of mouth. I don't know about you, but there's something called patient familiarity. Patients feel comfortable going back to their same doctor, their same dentist, periodontist, oncology, on and on and on, eye doctor, etc. Veterinarian, that they really like. All this is in the medical space. And there's that patient familiarity. They're building their clientele over the years. So between the cost, the build out, the patient, they're growing their clientele. For them to up and move very often, X amount of miles away, 20 miles away, 40 miles away, few miles away, very costly, and it deters them.
One statistic that is key to doctors being sticky is if they move, they lose 30 to 50% of their patients. And this is doctors or dentists. So it's one of the things that make them sticky. Nobody wants to lose 30 to 50% of your clients. And if they move even a few blocks away, it's just a national statistics, not one we made up. This comes from CoStar that, and that's why, that's another reason on top of all the reasons that you said on why these tend to be really sticky, whether they're 5-year leases or 20-year leases or anything in the middle, they tend to stick. You may want to move your screen along too, Jason.
We're not quite there yet, Tony.
Okay.
Thank you. So one of the other things that you're going to see in medical office building, it's what is called adaptive spaces. Many hospitals are going into local spaces. They're sending their patients. They're not doing it in the hospital. They're sending their patients to oncology. They're sending their patients to, different specialists in the area. Very often they're fairly close by a hospital, and so that we're seeing that more and more and more. And they're putting more beds. One of the things they're doing, putting more beds inside the hospital, gives them more space, more revenues there, etc. So those adaptive spaces are very important real estate in the medical industry. Very important there. We're seeing a lot of those these days. And obviously investing in medical office building offers a blend of stability, long-term tenants, attractive returns that we're going to talk about, and I think we know that that medical office makes a great addition to just anybody's portfolio. But often there's a risk. There's a risk in the tenants. They could perceive to be moved. There's a risk potentially in short-term leases. And, in 3 years and 4 years, X amount of those tenants, their lease is up. So you can get that with taking higher risk. We typically don't advise it, and we typically don't put those under contract. What we like to mitigate risk. We'll take a little bit less on the cash on cash returns to have a consistent tenant that is reliable. All right, that we've got nothing to worry about, so to speak. All right, we got less to worry about why our clients or us go back to doing what they do that generates their revenue. Typically, the doctors, the dentists, the professionals that are on this call, the entrepreneurs that are on this call. That is where you make your biggest revenue. And, right now, one of the things that we brought up at the event is a lot of you out there, and rightly so, we've all done it. You've traded your time for money. And when somebody asks me, when we talk to a client, if a client, gets to me, and they say they want double-digit returns, or, they want to invest in commercial real estate. And I'll say, why do you want to invest in commercial real estate? And they'll say, well, I want a higher return I want a high ROI. Okay, on my capital. Okay. And what will that do for you? I ask. And they pause often. They go, well, I'll have more money in the bank. And what will that do for you? And they say, well, I might be able to not be tied to the chair for our dentists. I may be able to not have to work till I'm 65 years old. And what will that give to you? And they'll say, well, I can do more of the things we want. I'm like, such as spend time with my family, travel, enjoy myself, less stress, better health. That's what people are really looking for when they invest. And so what we want is to help people attain what they're really looking for. Modified gross lease is very common in the medical space, dental space. What is a modified gross lease? The tenant, your tenant, let's say you're the owner, they pay a base rent and a portion of the expenses, utilities, some maintenance. But landlord pays tax, insurance, and a portion of the maintenance. All right. So when you're, let me talk about another one. Let's talk about a full service gross lease. Tenant pays base rent, landlord pays expenses, taxes, insurance, utilities, for instance. Okay. Imagine what that could do. All right. So yes, often, those leases, the rent will be a little bit higher. Yet, if you're going to be responsible, some of those unknowns can pop up and really wipe out this wonderful tenant who's been there a long time that has a long lease. So, you've got to know about the kind of leases so you can get those steady, consistent returns without the surprises that pop up. Make sense so far? Okay. There's a percentage lease. So they pay a base rent, and then they pay you a percentage of profits after they reach a certain threshold. Okay, that's still, gambling a little bit, so still gambling a little bit. You have to do a lot of good diligence there and a lot of research on their financials, on their consistencies. Then there's double net leases. And what we typically, and then there's absolute triple net. Okay, double net leases, the landlord is responsible for typically roof, structure. Tony, they're responsible for parking lot.
So the double net, the basic is roof and structure. Some of them have additional, some of them have parking lots, some of them will have HVAC or some others. Some of them have underground plumbing, not very many. But the basic is roof and structure.
So you got to be really careful with those. We do some double net every now and then if it's a very attractive investment. In fact, we've got an investment in the medical space. We're not showing it tonight, but it's about $1 million. I think you can get in for $250,000. It's a double net. However, they've replaced the whole roof in 2022. And then so the landlord basically and it's got a warranty on it. And then the landlord has structure. So, we send out boots on the ground and it's a solid building, inspect the structure. And if there's no structure and it's a great way to get in for $250,000 into the medical space, yeah, it's for the right, it could be for the right investor. Then there is absolute triple net lease. Absolute triple net. Don't forget that out there. Absolute triple net means that the tenant, okay, pays for everything. The tenant pays, anything goes wrong in the building, the structure, the roof, the parking lot, they pay utilities, they pay the taxes, they pay the insurance. So if you had a medical office, if you found a medical office investment, okay, for all the reasons that we just talked about, okay, the stability of the industry and the financial strength of the industry, all right, and you found a doctor or a group of doctors or potentially a corporation that owns many medical offices, all right, and they either sign a very long lease, they've got great financials, and it's also an absolute triple net, meaning you have no expenses whatsoever. That is what we often look for. That, has, you've got much fewer unknowns in there. So those are some of the things that we look for when we're going for office, because not all leases are created the same. Not all medical offices are created the same. So you've got to find, again, we love the industry. Okay, medical office buildings, they're very strong for, the patients, the pay, the tenure of the doctor or dentist being in place, the stability of it. All right. If we find a place with the doctors and dentists with strong financials, maybe they've been there for a long time. We'll show you some examples again. Or there's a corporate guarantee on top of it, and the corporation is strong, and they're guaranteeing a long lease. That's an absolute triple net, no landlord responsibilities. That's a good bet. That sounds like a good investment. That's a great place to start. And again, you be cash flowing and just collecting those checks every month based on the security of the tenant, the lease, etc.